Okay.
Okay, good. So all this by your left side of your chart, trading view, which is this side, your left side, while here is the right side. The left side,
Okay.
yeah, is for the tools you make use of, while the right side is price and the down side is the date, while the upper side is the time frame. Here is where you change the assets you want to look at or trade. We have stock, we have funds, we have futures, forex, crypto, index, bonds, economy, options, depending on the assets you want to trade or analyze. This is where you come and select the market. If it is gold, click on gold. If you are trading forex, you come here and select the pair you want. We have the Euro USD, British pounds. We have British pounds pairing with Japanese yen, British pounds pairing with US dollar. Here is crypto or the crypto market of the cryptocurrencies. Here is where you come and select the one. Everything is here. So over
Where can
here,
I find the gold stroke USDT?
okay, you go to your
All.
index. Yeah, index.
Okay, I've seen it.
Yeah, you see the gold over there, the first, yeah, select it. That's good.
Yes.
Okay,
Thank you.
you're welcome. So you go over to your left side of your chart, your trading view. Above here, you click on the small arrow. It will bring out all this for you. This is a cross, this dot, like your mouse, your cursor now. You can make it to be like this. If you want to change it, you can make it to be like this, like a dot. You can change it to arrow. It's not arrow. You can change it. This is a eraser, like a cleaner. If you want to clean something like this, you tap on it, it will wipe something like this. Then this,
Okay.
yeah, magic is nothing. Most times you will not make use of for this. Most times the ones you make use of is the eraser, the arrow
The eraser, where can I find it?
is here too. You click at the first two by your left side. You click at that small arrow to bring it out, pop it out. You will see the eraser. So once you copy, you click on the eraser. You can use it and clean something. Just tap on it. You see that?
Yes.
They are good. So that's for here. The second one, where you can get all your line, horizontal, vertical line, everything, extended line is here at the second one. You can see the small arrow there. You just tap on it. It will bring out everything for you. You can scroll down,
Okay.
you can go up. So for now, the ones you might be making use of for the moment will be a trend line. Trend line is something like this. Have you seen it?
Yes, yes.
Yeah, you can see it over here. I made it favorite. That's a trend line. You can use it and map out a line like this. That's for trend line. Then for rail line, this second one, you can see something like this. For the info line, to get an info, click on it. You want to measure something like a price action, like this movement from up here to down here. Do you see that? That's how you measure it out for the,
No, 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 I did not see it.
like, you want to measure out a movement, a price movement. You click,
Okay.
yeah, you click and hold and drag. That's for the bearish candle there to where it closed. If you want to measure a trend or a candle. Then for extended line, this, something like this. Here is a breaker, all-time high. You can see it here, acting as a support level. You can remove it. Then for trend angle, all these ones, it's not really necessary. So the ones I using mostly is horizontal line, horizontal ray. Horizontal line can act as a extended line too. This horizontal line is something like this. Then for,
Okay.
yeah, for horizontal ray is when you want to measure out a liquidity resting above. You see the line is moving at the right side, it not cross at the left side.
Okay.
Yeah. As for a liquidity resting above, then you can write, that is, annotate your buy side liquidity and
Mm.
move it, toggle it at the top, then at the left side. Hope you are seeing there is showing.
Mm.
Yeah, you can toggle, here is where you can toggle it. You can put it at the middle, you can put it at the bottom, then you can see at the center. This is where it will come at the center. You can put it at the right side, it will come at the right side. You can put it at the left side, it will come at the left side, then put it at the top for buy side liquidity. That's how I normally annotate mine. Let it come at the top side like that. Then for, that's for horizontal ray. Okay, you can see it. I made it favorite because that's the normally use. The ones I made favorite, you are seeing the yellow. That's the ones I normally use. Then here is the vertical line. I also make use of it, like to get a a zone. It could be London opening zone or New York key zone. You can get something like this. You can see it's having a break. This is where you can change it. You can change it to line. Now you can see the line. You can change it to dash line, which is the break one. You can change it to dotted line. You can see it. Then you can change the size. That's the width of it. You could make it smaller. That's one. To make it double or S times it or 4 times it, it will big. Then here you can change the color. You can make it to be pink, you can make it to be blue, and change it to black. So just any color you want it to be to your own preferable, okay?
Okay.
Yeah, that's for vertical line because those ones I make use of. You can see them that made them favorite. Anywhere you make favorite, it will come at the top of your chart like this.
Okay.
And this now, it has out from there. Once I make it favorite now, watch the horizontal line is added. Are you seeing it?
Yes.
Yeah. You make it favorite, it will add here on top of your screen so that it'll be easy for you to pick, to come and pick them.
Okay.
Yeah. So for the third tool, which is this one, here we get the Fibonacci retracement, which we use to measure at 50% level of any inefficiency or the PDA error like the other block, main threshold, breaker, half of it, fair value gap, the consequent encroachment of it, or a trend line or a price movement to get the equilibrium. Equilibrium is 50%. When you hear equilibrium, you know that it's a 50% level.
Okay.
Yeah. So you make use of your Fibonacci. This is your Fibonacci. I made it favorite. You can see it here.
Okay.
Yeah, I made it favorite. This is how you make use of your Fibonacci. Once you want to measure out an inefficiency, you click on it. Here is an inefficiency. You toggle from the low to the high, drag it. Once you click on the high of this candle, then you drag it up. Then coming to the high of this week low. For the low, you release it, it will be there. Now it's giving you the 50% of the inefficiency there. This is how you set your Fibonacci. Here is the 50%. As is 0.5. We have the 25% level. We have
Please, can you go back on how to say the Fibonacci?
that's where I am now. I had to set it. You can see set your own like this. You can see set yours like this. This is where you put your 50%. Once watch this line here, the 50%. Are you seeing it? Hello, are you there?
Yes, yes, I'm there.
Yeah, this line here is our 50% for this inefficiency CB, which is this 50%, 0.5. You can come here and change the color of the line. You can see it's changing. You can change it to blue. You can change it to black. Any color that you prefer. So you can change it to, I prefer using blue for the 50%. If you want this to pop out on your screen like this, you double click on this Fibonacci here. You double click, it will pop out. Do you get that?
Okay, yeah.
Yeah, you double click. That's right click. You double click, it will pop out.
I mean, how can I set the Fibonacci? That is that 50%. That is, you are there already. I mean, can you show me from the
Okay,
this thing?
from your own chart.
Yeah,
When you
no, I mean, that is, can you start afresh from that thing so that I can know how to set the Fibonacci, the 50%?
Yeah, that's what I'm showing you already. Once you click on Fibonacci, once you copy it, once you come here and click on it, it will follow your mouse. Do you see it?
Yes.
Good. Once you release it like this, something like this will pop out on your chart.
No, I'm not talking about this one. I mean, how to set it, the 50%, 20%,
Learn
something like
first.
that.
Yeah, I'm on the process. I'm showing you how to set it.
Okay.
You learn. Once you toggle it and come here, something like this will pop out. You come here, settings. You see setting. You click on setting. Something like this will come out for you to set it. Now, at the right side of it, here is the left side, while here is the right side. Okay,
Okay.
you count from below of the right side. 1, 2, 3, 4, 5. That's your 50%. 0.5. That's what you will write inside the box for your own chart.
Okay.
Then you put the preferable color you want so that it will be showing the color at the 50%.
Okay.
Yes, you put 0.5. Here is 75%. and 35% level. You can set it yours like this too. Then choose the color you want for them to be showing. Your 50%, you have to count from the right side of your this side. 1, 2, 3, 4, 5, 0.5. That's what you put there. And that becomes your 50% anytime you are measuring it out.
Okay.
You can see that's the blue line 50%, 0.5. At 0.5, what's price there? That is price of gold at 0.5 is 2,450. See it at the right side. That is the price you are seeing there. Are you seeing it?
Yes.
Yeah, that's what it's showing you. Here is the price at 0.5 at 50% this.
That 2000, that 2450. What do you mean?
That's
What's
price.
the meaning?
Price of gold. See it at the right side. This is price.
Okay.
Yeah, at the level of this line, 50% is 2,450 worth of gold price level. While here is the two and under below is the time.
Okay.
Okay, yeah. That's for Fibonacci. How to get the Fibonacci 50% level. Yeah, we have trend-based Fib extension. I don't normally use this. I don't normally use all this. So in this case, the only one I make use of is a Fibonacci. Is a Fibonacci to get my 50% level and standard deviation. But we come to standard deviation later. Let's finish on this first. So the next one we have this. I don't this Elliott impulse wave, Elliott correction. But what I trade now is price action. Is when I started, I used to make use of these tools, but everything is purely price action. So as you get to learn more, you will understand and study the price action more. Okay,
Okay.
yeah. So coming here, we have long position and short position. Let me start from the long position. The long position, sorry for the long position. For instance, we have a fair value gap here and a little breaker, and price took out a low here. Here is a sell liquidity. This bearish candle is taken and we deliver inside an inversion value gap here where the price deliver into. We had a little break here, breaker, and created a fair value gap. Price delivery to make it complete. Then if you want to enter long, that's for the long position, for the long position for your risk management. So you come and here and click on the long position. You can decide to enter at this fair value gap. You can see price move up after delivering inside the fair value gap, which is a spooling point of a macro. At what time? Watch below, you will see 10 o'clock. Are you seeing the time
Yes.
there? Good. And at 10
Yes.
o'clock, yeah, good. At 10 o'clock, there is a macro called silver bullet on that is during New York time, New York 10 o'clock. There is a macro that normally occur a price movement at that time of the day. It happens every day, almost every day. It repeats all the time because this is algorithmic trading. So at that time of the day, you can see there is a price movement that deliver inside an inefficiency, and that price movement usually starts in an inefficiency like a fair value gap at the time of the day, by that time of the day, 10 o'clock to 11. So you are looking at price delivering inside this inefficiency at this time of the day, then you look out for a high, a liquidity. That's draw, the next draw on liquidity. Here is a draw on liquidity, reverse high for your profit. So to enter for a long position, this is you come and take your long position. To enter a long position, you click here, you drop it. If you are taking profit here, where price deliver into that place now price is, then you take your set your stop loss here below this other block after taking the set side liquidity. Here becomes
Okay.
your other block. This is how to enter a long position. 3:9 is a nice trade. You can decide to go 2:1, 2:5 is also a nice position. 2:5, that is if you're entering with $100,
Okay.
yeah, you are going to make $200. Then if price go against you, you are going to lose $50. Do you get that?
Okay. Yes, yes.
Yeah, that's for long position. That's here where you come and select it. Long position. The same thing with short position if you are selling.
Okay, but if I may ask, what was the second idea?
This price action, there is no, is this fair value gap you are seeing and time of the day 10 o'clock, that will let you know that there is a price movement about to occur because we have a set side liquidity have been taken and we deliver inside an inefficiency, which is this inversion fair value gap, this gap here.
Okay.
So at the time of the day 10 o'clock New York time, there is going to be a price movement and it starts in a fair value gap. This is the fair value gap. This is 10 o'clock. Even though we had a little consolidation there before price move up and created a small fair value gap too. You can see that small fair value gap. That's where price delivered. Then this candle here acting as other block, last close candle. This bearish,
Okay.
yes, is the last bearish close candle before this. This low is lower than this low. So that's a other block. Where do we deliver into inside an inefficiency? Where price going? Draw on liquidity. The next draw on which is the buy side liquidity. You take out something here. You take out a partial. Don't wait for full pull for this moment. Now you are still learning. Take out partial. You can see deliver to an inefficiency too. This candle, you take out something here. Make sure you take out something. Pay yourself. Then you wait for another price action like this now, a displacement after taking this high and redeliver. This is a redelivery, a second redelivery inside this fair value gap. Here is a breaker. So we are coming to that already. So just showing how to make use of the long position. We are coming to this for now. Same thing you do with short position. If you want to sell, after a redelivery inside here, this is a breaker and we had a displacement, price break below this bearish candle, that's a displacement, break of structure and created a fair value gap. Here is
That is
another.
that displacement. How can I identify it?
Okay, good. A displacement, how do you after a run up to a buy side liquidity or to any inefficiency, taking a buy side liquidity, the last bearish close candle before price went up there to take the buy side liquidity and deliver inside an inefficiency or any PDR resting above, which here is a breaker. If we break below that last bearish close candle before that movement up there to take the buy side liquidity, If price break below it and close below it, that's a displacement, break of structure. Then create a fair value gap. Here is a fair value gap. Wait for price to deliver inside, to trade inside this fair value gap. You can put your stop loss here. That's where now you now make use of your short position. That's where short position comes in for your risk management. As price deliver inside the fair value gap, you can set your stop loss above here. Then you target the low, the sell side liquidity. Here is a sell side liquidity. You see, price took it out. This is a nice trade. 2:8. It's a nice trade for return on investment. Your stop loss above here. Take profit at the low. We have taken a buy side liquidity. Ergo, price will seek for a sell side liquidity that engineer the movement, taking out the buy side liquidity. Where did the movement started? Here. Here was the last close candle before this candle closed, and we started trading up, and we took out the high here and deliver inside a PTR with a breaker here and a small inversion fair value gap. There's a small inversion fair value gap there. You can see that. You can change the color. That's an inversion fair value gap.
How can I identify that?
As an inversion, this is a CB, sell side imbalance, buy side inefficiency. Between this candle high and this candle, the other block, the last bullish close candle, the low of it, there is a gap there. That's CB, sell side imbalance, buy side inefficiency. Hope you can see that clear.
Yes.
You can see it between this candle, the bullish candle, the high of the week, and the other block. Here is the other block, last close candle. That's bullish close candle.
Okay.
Yeah, the low of it. That's the week, the low of that week, and the high of this bullish two here, the high of it. That's a CB, sell side imbalance, buy side inefficiency. It's a major
The
resistance.
the high of the this thing, the displacement.
Yes, yes. The second candle after the displacement,
Okay.
the bullish candle. Here is the displacement candle, the bearish. Then the second candle, which is the bullish candle, the high of that week.
Okay.
Yeah, the CB acting as a resistance level. So this price movement you are seeing here, this is a redelivery. Yeah, it can be claimed again, it can be reclaimed. Like price can come after resisting it here. Price can come back to it again, which is this now, a redelivery, taking out the high with the body. This high is lower than this. This high is higher than this high. The body will tell you the narrative. Have you seen that?
Yes.
Yeah, the body will tell you the narrative. Why the weak will do the damage. So you are looking at the body, what the body is going to do. Here is a redelivery, then a displacement, then a fair value gap after a displacement between this last close candle here, the weak, the low of it, and the second candle after displacement, which the same second candle after displacement. Do you see that? Are you there?
Yes. Yes. Yes.
So the second candle after displacement candle, the high of it, and the last bullish close candle, the low of it. CB, sell side imbalance, buy side inefficiency. So inside it now, the 50% of it is acting as a resistance. We have taken a high here already and delivered inside an inefficiency. So price will seek for a sell side liquidity, which is this. And at the time of the day, that's what you are looking at. Time of the day. Here is Sunday opening price. Look the time below my screen. This is Sunday opening price. We delivered inside this inefficiency CB. Then seek for, we got opening price. At any opening price, price will seek for a liquidity. This is what the liquidity now is seek for. The here is the liquidity resting below. So we took it out. That's where making use of your short position comes in. You can enter at the high of here, this high here, this high. That's where you put your stop loss. You can see stop, your stop loss here above. Then this is your entry. This particular line here is your entry. Then you take profit at this low. Here is also a inefficiency CB that supported price at time of that day, 10 o'clock, a starting a schooling point. So price normally starts to move going to a target or a liquidity or any inefficiency resting above or below inside a fair it must it's a must it's going to deliver inside a fair value gap. That's price action. It's going to deliver inside a fair value gap before it starts pulling to deliver to a liquidity or any inefficiency resting above or below. So that's for the short position. That's the tool I normally make use of inside here. You can go here is come the rectangle you ask of is the rectangle. Hope you are seeing it.
Yes.
That's the rectangle. This is brush. If you want to clean something, something like this. That's brush. Maybe you want to draw a line. The second one, highlighter. Something like this. But not everything you make use of sha. So we have arrow marker, we have arrow, something like this. We have arrow mark down. Here comes the rectangle. This is where you see the rectangle at this level. You click on that small arrow there, it will pop out the rectangle. So you click on it, you can make it your favorite. It will come at the top of your screen here. You can see
Okay.
there, yeah. Once you click on that yellow, this star, you have made it, yeah, you see it, it's now favorite. It will be showing you add to favorite. You click on it, it's up there now. You can still move it inside there to come from. You can still move this to come. You can still move any of them, tackle them, anyone. Just click and hold and drag. Click, hold
Oh,
and drag. Click, hold and drag. So let's go over to rectangle now, how to make use of it, which you are seeing here, using to measure out the fair value gap.
fair value gap.
Yeah. So it's rectangle. Your rectangle you make use of. You click on it. You anchor from the high of the first candle, which is the order block, last close candle, last bullish close candle. You anchor and hold. You click and hold, drag, coming to the second candle after displacement candle to the high of it. There, you release. Then you drag it to your right side because it's going to serve a purpose in the future. You can see what the purpose here, acting as a here now is acting as an inversion because price have violated it. It acted as a resistance here. This is a rejection block. You see that rejection, that's a rejection block showing that here is a major resistance. Coming over here, price violated it. That's why it's now acting as an inversion. That's how you make use of your inversion. That's how you utilize your inversion fair value gap. When you hear about inversion fair value gap, it's after a price violated a fair value gap.
And how will I know that a price have violated the fair value gap?
It's trading above it. Once it trade above it for the first time, he rejected it. He rejected price. This is the first time attempting to go up. Price was rejected. We traded down to this liquidity resting below. Coming up to that again, price trade above it with candle body. Here is a candlestick showing that it's a rejection, a resistance. The CB acts as a major resistance or support level. But in this case now, it's acting as a resistance. This CB coming to there, price coming to it again for the second time. We trade above it. This is the candle that trade above it, then rejected it because it's now acting as an inversion. The 50% of it, that's what you look out for. That's when you make use of your Fibonacci now. It's a CB. You anchor from the low. This is the candle that created the CB. The second candle after displacement candle. That's the bullish candle you are seeing there.
Yes,
Yeah, that's the candle that created the CB. So you pick your Fibonacci, you anchor from the high of that candle that created it to the low of this last close candle. Here is your 50% level. So you use your horizontal ray, you place it at the exact line. Can you see that?
yes,
Yeah, you can now remove your Fibonacci. Here is your consequent encroachment. You can tackle it to the right side, then to the middle. Yeah, you can change the size of it. You can make it big. You can change it. Hope you are seeing it.
yes,
Yeah, you can change it. I normally use 10. 10 is okay. So here is your 50%, the consequent encroachment of this CB inefficiency here. Price violated it trading above it and close above. So coming back to it again is acting as a support level. Now it's a inversion here. Inversion fair value gap. It's a support level now because price have violated it already. It's acting as a support level. So where is price going to the high of this? Then we took out this high here. Here is a previous last close candle, a breaker. This other block here, bullish other block. So here is a bullish breaker. This is the candle that break above it. This candle here, you can see the
yes,
speed here. It's a bullish breaker. So anytime you see a bullish breaker or bearish breaker, look out for there must be a fair value gap. Anytime you are anticipating a breaker, you look out for a fair value gap created after the breaker. After this break of structure here above, price created the fair value gap. You wait for price to trade and deliver inside the fair value gap. This is CB, BC, buy side inefficiency, sell side imbalance. You extend it to your right side, still going to add the same purpose as support level. You can see it. as a support, here is acting as a support level, a major support level after a break of structure above here. This breaker also, the half of it is acting as a major support level. You use your Fibonacci to get the 50%. You anchor from the low of that week, the whole of that candle, that's a breaker, to the high. The half of it, that's the 50% you are seeing now. That's the 50% of this breaker, the up close
Okay.
candle. Okay.
Okay.
Yeah. So when price is trading to the fair value gap or deliver inside the fair value gap, you can put your stop loss below here. Then you can see the movement up and see how you are trading up. That's for how to identify a breaker
Okay.
or that block. Here is an order last close candle created before we break above it. It's acting as order block before. Now we have break above it, turns to a breaker because it's the last close candle, the bullish candle there is the last close up close candle after this movement from up here, from down here to up there. Then we break down, we sell off. Coming up there again, this high is higher than this until we break above it and created a fair value gap. So what we are looking out for is a fair value gap after a break of structure like this. Wait for price to trade inside it at the 50% level. You anchor from the high to the low is BC. YCB, you anchor from the low to the high. BC, you anchor from the high to the low. This is the candle that created the fair value gap. It not closed that gap. It's a candle that left this gap, which is the fair value gap. This candle. So
Okay.
you're anchoring from the high, the low of it, where it closed with the wick, to the high of this second candle, resting here. That's your 50%. You can see where price deliver into at the 50%. This is a redelivery. It can be reclaimed after the first attempt. Price can deliver inside it for the second time, which is this redelivery. It's normal. It's normal. So that's why you have to put your stop loss over here in case of a secondary delivery. So it should not take you out. You put your stop loss here. At the secondary delivery, you can target high, this high here. This is a buy side liquidity. This is a buy side liquidity. Last up close candle. We break above it again as a high break of structure. So when you see this kind of thing, that's price we are buying, we are long, and prices have been buying, gold have been buying. So this here is the all-time high of gold. This is the all-time high of gold. This is a consolidation. We have had a break of structure now. It's a break of structure. Here is the last close candle. This is a break of structure. Here is a fair value gap after a break of structure. It will be acting as a resistance. Yeah, acting as a resistance level. You can see that. So until price break above it, then close.
I'm not seeing your candlestick well. It's
Okay,
is
I read.
tiny and
Yeah, I read. Hold on. You can see
okay.
it now.
Yes.
Okay, good. So once we break above this and close above it, so we're looking at price coming to take this buy side liquidity here. I said buy side liquidity. So with everything now said, is there any question, anything you need to understand more?
About the that inversion fair value gap.
Okay, yeah, all right.
Okay.
Yeah. Before this movement here already, here is a CB. Before this movement, let's come over here now. Price, we had a break of structure which is here, last close candle, or can bring this a last close candle. This low is lower than this. We have a high, a low, then a higher high that took out this buy side and deliver inside the inefficiency here. Then had a break of structure, created a fair value gap which is CB, set side imbalance, buy side inefficiency, acting as a resistance level, and we have a set side liquidity resting below. That's what the algo will seek for. From we trade algo seek for liquidity to liquidity, inefficiency to inefficiency. For the first attempt, price coming to this CB, which is this candle here, it was rejected. Price was this candle is a rejection block.
Okay.
It's showing you that here is a major resistance. Here is a major in a resistance area. Price will be rejected because you know what is a resistance, like a ceiling. You hit a ball on it, it will bounce back.
Yes.
Yes, because it's not able to pull it up because it's a strong resistance. You understand? It will
Yes.
yeah, it will bounce back. That's what happened here. Price was rejected. So coming to it for the second time. Here is the second time, right?
Yes.
We trade above it now. We have pushed that ceiling up. We have break that ceiling. That ceiling now will now turn to a support level because we have pushed it above and close. Do you get that?
Yes.
Good. Since we have pushed it above, price have break the resistance. It now turn to support level. And this CB now will now turn to inversion. That's how you get inversion fair value gap after violating a fair value gap already. Coming back to it,
Okay.
it will now act as an inversion, as a support level now, no more a resistance, because if you break above it and close, then retracing to it back again, it will act as a support. That's how you get your inversion fair value gap. Was that all clear?
Yes. Yes.
Okay, that's good. I'm happy you got it. So you study more of identifying a fair value gap and the inversion fair value where price violated a fair value gap. Okay, you study more of price. These all these are price actions. After it break,
Okay.
yeah, after breaking a resistance, it will turn to a support level. Price will not be able to go below it again. Then you look out for a buy side liquidity resting above. Same thing if it happens on selling, sell delivery. You look out for a sell side delivery, like here. Price was not able to break above because we have a resistance level here, which is this CB. CB is acting as a major resistance area, like this premium level. Then we have discount area. Discount is below, premium is above. Is that clear?
Yes.
Okay, good. So that's for today. That's for today's class. I thank you for showing up.
Okay, thank you.
You're welcome. So you practice. I will screenshot this too and send on the group. So you
Okay,
practice over and over.
okay.
Yeah. You have a great
Thank
day.
you.
You're welcome.
Mm.
Yeah. See you at the top. Wish you all the best. Make sure you stay focused. Okay. Yeah. Bye and be safe.